All
So
right.
this has been as I mentioned earlier, this has been a humbling time to be a professional investor. We're now looking at, I think Nikko Securities estimates that global GDP fell 2.7% last quarter. The UK's projected inflation is between 13 and 15% by year end. China's property crisis has taken 90 billion off the market cap of their developers, and they now have high yields, junk bond yields of over 25%. And now you have Europe with their power issues and the drought issues hitting as we go into the winter season. So there's a lot of cross currents going on right now that will have an impact on food inflation and the midterm elections. So I want to just touch on each of these quickly and then open it up for discussion. So the pandemic and now the war in Ukraine have exacerbated a problem. It's been a problem for a while. We have a significant portion of the population facing world hunger. And you're looking at the causes of that are the conflicts that we've had throughout a lot of the regions, climate issues, economic downturns, and the frequency of them lately, the pandemic, the war, and add to that the inequality that exists around the world, and the food issues are getting worse. And the United Nations just released their report for 2021. And I believe that the next year's report comes out will be even worse because of the problems we've seen so far. And I think as you look at the problems, it's really speaks to something I've talked about a lot, which is the three inequalities that exist in the world: country inequality, company inequality, and income inequality by individuals. And I think what you're seeing here with the food insecurity issue, where 50% of the undernourished in the world live in Asia, a third of the undernourished lived in Africa, and another 8% are in the Caribbean and Latin America. So we have this growing problem that has been pretty persistent for some time. And I think there's the war is worsening that, as we know, with the fertilizer and grain issues and the struggles of Russia and Ukraine's role in feeding the world. But I think this issue is one that's been going on well before the pandemic and well before the war. As we've seen, as you can see here, how it's creeped up. Food insecurity by region continues to rise year after year after year. And as you can see, Africa, Asia, and Latin America really hard hit. North America and Europe less so, but I think the energy problems of Europe are going to be the significant issue there. So we've talked about this before. The food banks in the US are being overrun these days, and then we have problems here where they're having trouble meeting demand. We have food problems throughout, and it goes back to the issues of inequality and others. And the UN's report says there's kind of 6 suggestions that they have to deal with this. One is to support people better after in conflict zones. Easy to say, hard to do. Another one is to really focus on creating better security in the food supply system, achieve more sustainable growth around the world, which obviously if we could do that, we would be doing it already. Lower the cost of nutritional foods and nutritious foods, address inequality, and those are the main ones. So these are big items, and given the way the world's working these days, not something you see getting resolved very quickly. So I think we're going to have a worsening problem here, which will lead to more social conflict inside nations and create a tougher time for countries to get on a more sustainable growth path. So I think this is an area that we're going to be continuing to be dealing with. Fortunately, this community does a great job of addressing and trying to help in this area, but we have a lot of work to do. Switching gears, I want to talk about the case for peak inflation and what's going on in the world in this area. And I think what we saw in July, you had headline inflation drop to 8.5% from 9.1 in June. So it was a pretty significant drop in from the previous number. But core inflation stayed flat in the US. And I think that's a problem that we're seeing with wage issues that are going on, which are very complicated. And I would say don't get too enamored with any of the numbers that are coming out, because I think you're going to see pretty significant shifts in there. The core inflation in the US was flat month over month, but the wage inflation was over 5.5% during that period. So we have a lot of conflicting data going on. Here's a breakdown of the CPI, and you can see energy drop was a big one, where we went from $120 oil moving all the way down to the 88 level. One of the things I would say about oil right now is the forward curve looks like it's going to be going out into mid 2023, only dropping to $86 a barrel on WTI. So not a significant move down expected from here from the market. I would also point out that appliances and some of the things that were so hard to get are now seeing price declines. And the other big change in the month was car rentals and airfares. I think some of that's energy related and change in consumer behavior, but some of it's also the more normalization of some of the issues that we see going on in the economy. The reasons that inflation may be peaking are many. I'll give you the big ones. I think it's the slowing global growth. You have China and Europe facing a very difficult winter and upcoming months. You have inflation fears, which are bleeding into consumer confidence, which then bleeds into corporate confidence. And those are all factors coming into play. You've seen a massive commodity price decline. There's interesting things going on in the labor market. I don't know if you saw today, Apple laid off 100 recruiters for their company. So that gives you a sign of what their outlook is for hiring. And you've seen more layoff announcements coming, and they keep building and building. Those are wage freezes that are going on as well. And I think you're going to see a really unique dynamic in the labor markets where more of the white collar workers are going to either see their positions eliminated or their increases, not seeing the increases in comp coming to them, and more of the lower paid workers seeing more wage increases. The unions contracts coming are pushing some wage increases through. But the question then becomes, does the wage rate go up, but for companies, their wage bill or their total amount of wage cost not rise because they're laying off people on the other, taking away on, giving on one hand and taking away on the other. So I think it's a very complicated environment we're going to have to keep an eye on and see how that plays through. I think you've seen global supply chains ease quite a bit, but again, nothing is clear in the environment we're in. So while some supply chains are easing, are they easing for the right reasons? Is the slowdown in China demand creating an ease of products moving? Did we oversupply inventories? Walmart has 12 billion of inventories. I think 11 that 1.5 billion of it is going to have to be marked down pretty significantly. So you're seeing some supply chains easing in some areas and increasing in others. And I think that dynamic of an uneven economy and pockets of companies benefiting and industries benefiting and industries getting hurt is going to continue to play through. I think one of the big issues that is undervalued in the markets in terms of its impact on the global economy and on inflation is that central banks have been tightening. And in July, on July 22nd, it was around 245. After the Fed announcement, it's now looking like it's closer to 3% for global short rates. And you think about moving from around 0.75, 0.8% up to 3% is a significant tightening when the global economy is sporting something like $300 trillion of debt. So I think that's a serious tightening condition that's going on that doesn't get weighted as much. People focus more on the Fed funds rate, but I think the US economy is more a reflection of the global activity and therefore more a reflection of global short rates. We have seen gasoline futures drop, and now we've had the announcement that they're now gas prices at the pump are dropping below $4 in the US, which is a big change for us and does ease some of the pressures, but you have seen a pretty dramatic reduction in driver demand as a result, and that's creating some shifts in the supply-demand issues. But like so many of the things we have in the world today, where we're oversupplied is not where we need it. And where we need it, they can't get it easily and at a reasonable cost. I think that's one of the conflicts that we're going to continue to see. So the reasons why inflation may be more persistent are real and need to be fully weighted. I think companies are in the process of still raising prices, although that's slowing down because there is starting to be pushback from consumers on it. I think the wage increases in the union contract negotiations are going to be ongoing. People that haven't gotten the benefits of the economy for a while are going to continue to push to get more. I think the quirkiness of supply and demand in the markets is one that's going to create continued imbalances. The war is obviously playing through in food prices, but I'm really concerned about two things. Really, the energy situation in Europe is going to be very difficult. And I apropos the question that the comments starting the call or ending the last session on Ukraine, and I think one of the big issues is what's the end game for Putin to save face and try and achieve whatever goal he wants. And I think it's going to be exerting maximum pressure on Europe in the winter for energy and see if they can break the will of the NATO nations to separate. I think in the interim, if we hold to the coalition that we have right now against Putin, you will see higher energy prices, and that's going to make for a very difficult situation. And then you add to that the green energy transition, which is creating drought conditions in other areas around the world. The green energy transition, as Mark mentioned, is inflationary in the initial stages while you're trying to create the scale to make these different technologies more efficient. You see higher prices and then they come down later on. So as we're making this transition, we're creating two forms of higher energy, both in the new stuff and in the fossil fuel area. So I think those things are going to continue to weigh on the system and offset some of the easing of inflationary pressures. And it's really going to be a tug of war back and forth. As a result of this, I do not see the Fed doing what the market is expecting, which is starting to cut rates aggressively into 2023. I think the Fed needs to kill inflation once and for all. If you go back to the 70s, one of the problems that the Fed had was they pulled back and reversed course too soon, and that created the second wave of inflation, or the second and third waves of inflation that we saw in the 70s. So I think Powell is going to be a little bit more steady on making sure they kill off inflation. That means we're going to have higher unemployment, and you're starting to see that bleed through, which makes for a more difficult economy overall. As that moves us to the midterm elections, which were a slam dunk for the Republicans in June. And as of last week, the betting market said the House is going to the Republicans, but the Senate's staying with the Democrats. I think the Senate's too close to call still, but it shows you the shift of what's occurred. And I think there's a couple reasons for it. The Democratic Congress has been more effective in putting through bills, and they got the semiconductor bill through with the Republicans, and that was a big initiative around national security. The Inflation Reduction Act, which might be more than a slight misnomer in that it's not likely to reduce inflation, but it does push major agenda items forward for the Democrats, particularly around healthcare. I think that's favoring the Democrats when at a time they needed a boost. I think add to that, the Dobbs decision to overturn Roe v. Wade is actually changing the dynamics considerably and shifting the voter interest to this midterms probably to a higher level than it would have been previously, could impact voter turnout in states that were traditionally either Democrat or Republican. And you may see a very significant move in the Kansas vote on their state issue was an important sign, which is typically a red state, really focusing on continuing the abortion rights. I think Biden's approval rating continuing to drop is not a great thing for the Democrats, but they did get a benefit and a boost from the CPI headline easing. But the issue is going to come down to people think they're better off than they were before or not. And I think James Carville said it best, it's still about the economy. And if people don't feel confident where they're going, and the issue on that is real wages are down because of the inflationary pressures, that's putting people, even when they're getting the increases, feeling that they're still falling behind. And I think that's going to continue to be a problem. So I think the Republican Party has not necessarily stepped up the right way to try and offset this. I think the overhang of Trump is, for hardened Republicans, is a very positive sign. I think for getting some of the swing voters is maybe a challenge, and that's got to play out and see how that evolves. But he looms very heavily over this midterm and over the future of the politics in the U.S. And I think there's a lot of cross currents right now. So what looked like an easy path for the Republicans has suddenly got much more difficult. So Mark, I'm going to stop there. I think the Republicans will take the House and likely take the Senate, but it's going to be close, and we will be in a gridlock mode for the next 2 years after that. If for some reason the Democrats win, though, I think that could have some significant economic implications on the other side as well. So we'll have to just say, not really the base case, but with our elections, you really have to be careful. So I'm going to stop there, Mark, and open up for discussion.
Right before I open it up, you mentioned we're going to have, I don't know, Miles was going to interview someone on the political front. Are you doing an event around that, or can we?
Yeah, we are going to do an event with Frank Luntz, one of the real experts on politics in the U.S. and a pollster who really has his finger on the pulse. I think it's going to be probably in October, where we haven't finalized the date yet. I think we'll do one before the midterms. So that'll be an interesting discussion, because he's got a very good handle on the state of politics in the U.S.
Will that be in person or Zoom?
It'll be a Zoom.
Okay. All right. Questions, comments on?
Yes, Stephen, I've got a question, purely hypothetical, as you had thrown it out there. If the Democrats do keep the House, or keep the Senate and the House, you mentioned that would have significant economic impact on the U.S. What do you mean by that? Positive, negative?
I think it would continue the spending that we've had going on in a way that we can't afford. So I think it would be negative. I think we would create more inflation. I think we've thrown too much money at the system, more than it can handle. And I think it would create more inflation if they're not careful and try and push through too many more programs than we already have. And keep in mind, we have a $1.6 trillion of overhanging student debt that has to be addressed. And that was highlighted as one of the areas they'd like to wipe out a lot of that. You can't just keep throwing money at problems and think you're solving the core issues. If the government was run effectively, they would say they would take the student debt, take it on their balance sheet, charge no interest, and let people work down their debt in a more efficient way. And but there's so many problems that we have that I'm concerned that the spending would continue unchecked in a way that we can't afford.
Hey, Stephen, Andrew Randak here. I think most student debt is owned by the federal government. And if that were forgiven, it would just be an asset reduction on the federal government's balance sheet. Is that correct?
I'm not sure that that's how it works. I'm not sure. But because it is owned by the government, instead of charging 7 and 8% interest that they were charging, and having a significant amount of those people not able to pay it at all and go into default, they would be better off eliminating the interest and just trying to get their principal back, and consider that a win. It's also a way to give the education support that they talk about giving to people. The other problem, Andrew, as you know, with a lot of that debt is that people didn't get their degrees. So it was really unproductive debt on top of the fact that they can't afford to pay it off. It didn't achieve its goal.
No, I mean, there's a moral hazard here, but there's also sort of a weird ridiculousness that all of it's owned by the federal government. And I think the income on the federal government's balance sheet, I looked this up a few years ago, was something like $35 billion a year of income from student loan debt. And hypothetically, sort of like Treasury with the Federal Reserve, they could just poof and make it disappear. And you're giving up $35 billion in annual income. So,
but I think, Adam, that's one of the areas that they've targeted. I don't know. I don't see this all. I don't expect it's the case. So I don't think it's really worth spending a lot of time on. I think the probabilities are low that they take the House.
Follow up to my question, in the last question. If the Republicans do take, is that how would that impact the economy? Would that be gridlock, or what are we looking at?
I don't think they'll get much done. You were already going to start campaigning for the next election shortly after they get in.
Got it.
So I think we're moving into the presidential election very quickly after that.
Okay.
So I don't see a big change.
Other comments, questions?
Yeah, I had a comment just on the whole student debt thing. I mean, I want to take a counterpoint to that. I mean, if we are empowering these citizens to inject more money into the economy, doesn't that provide some sort of benefit also? Or is it simply just a dollars and cents? We're missing out on this 35 billion income into the government. Isn't there a trade-off that we're allowing people in the community to actually start investing in homes and cars and things that was going toward their debt?
It's an interesting case, I guess, and that gets the moral hazard issue, right? So I think that's going to be an ongoing debate. Yeah, they have less debt to pay off, so they could use it to make a down payment on a home, is the argument, right? Or to, be able to afford better food or whatever it is. But I think the issue is we have a debt problem in the world that we have to deal with, and you can't just eliminate it all. It changes the whole system. It doesn't flow right. Unless we go to a debt jubilee, like they say in the Bible, then you have a bigger issue.
What's obviously a nuance. It's a nuance that, because you've also been talking about what could be effective return on investment in infrastructure. But sometimes, like in these crises, we throw money, to Robert's point.
Yep.
And Adam's point. But Joel, I want to, before we move on, you reminded me, I need to tell the community that we have decided to push back Michigan in October, going to Grand Rapids where Joel is, and Barbara too. They may be connected or separate events in the future. So we will, but we're going to be doing some Zooms and some other things to address part of what Joel is talking about is helping with prevention and re-entry in the juvenile delinquent let's call it and beyond, right, in our prison systems and providing the ecosystems around that. So he's on the front lines. That's partly where he's coming from. Sorry, I cut you off, Joe, if you wanted to finish your thought.
Yeah, I mean, I guess I also would just question, maybe Republicans aren't going to spend more, but past history shows that they're spending a hell of a lot too, just on different things. And they've increased spending and deficits just as much. Maybe the future will be different, but that's just my take on it. Looking at this discussion about Ukraine, I mean, we wasted over 600 billion in Afghanistan, and there are just other ways the money's going to get squandered as well.
Yeah, I agree. It's not a Swiss watch, and under Trump, they were very aggressive in terms of spending, which was non-typical of the party. But I think there's a lot of waste, but the bill's coming due for a debt soon with the higher interest rates, and that's really the issue, is they're choking off. And Manchin's been on this from the start. We have an inflation and we have a deficit problem that has to be addressed. And I think anyone who wants to win the presidential election is going to have to get inflation down, which will affect their spending. I think that's really the issue. I think it's about the economy, and if it's about the economy, they're going to do what they need to do to get elected. And
Other questions, comments?
And one last thing about the debt. I think the federal government's spending $1.5 trillion less this year than last year, to Sherry Lee Gordon's question in supply and demand in the chat. So the aggregate demand is already dropping by 1.5 trillion just from less government spending this year. It's one of the major reasons why GDP is down this year, or flat to down this year. So.
Yeah, the fiscal tightening that's gone on around the world, as well as the monetary tightening, has been pretty significant in the last 12 months, 18 months. And that is actually part of the slowing of the global economy too. That's a great point.
So Stephen, are you expecting the Fed to raise another 3/4 of a point in September or not?
50 or 75, and then I think they'll do more before the end of the year. I think they have to get it up higher, and I don't think they're going to be, I think where we really diverge from the market is I don't see them cutting early next year. Even, I don't think they would cut until later next year and they'd really need to see inflation down.
Well, if
When I don't think
they continue to raise, then really this move in the markets is more of a bear, upturn, but longer term, it's going to go down because markets don't like rates going up. So,
Yeah, we've had the view that until the inflation peaks and the Fed stop raising rates, you're going to have a challenge in the equity markets. You'll also have a problem in the bond markets as well. But we think we're getting closer to the end, but we're not there yet. And the market does discount forward 9 months. So if you think it's another 75, how much of that's already in the market is really the question. If it's 1% even, how much of that's already in the market. I think one of the other issues is that 2-year is significantly higher than the 10, and that it needs more time, but it's moving along the process to a real recession indicator. And the gap is growing between the 2 and 10. That's not very healthy. So I think there are real conflicting forces in the market right now that make this one a particularly challenging time, particularly after the 17% rebound we've had in the markets and the significant drop in rates on the 10-year from where it was at its peak to where it is now.
Stephen, I saw Rubani, Dr. Doom, earning his name on Bloomberg the other day, and he was talking about the economy going either a hard landing or outright inflation out of control. And he said that those are the only 2 options based on that Bloomberg. Any thoughts on that? Did you see it, by the way?
I glanced at it. I didn't really read it. But I guess I think the Fed has a problem. They're going to have to, unemployment's going to have to go up considerably to get inflation under control. And there's a process that's underway right now that you're seeing with corporations and with their layoff announcements or hiring freeze announcements. I heard yesterday from somebody who's pretty senior at one of the big banks, that they're going to be asking people to come back 5 days a week in the next couple of months so they can thin the herd, because they know people won't do it. So instead of actually firing them and laying them off, they're going to give people the option to quit rather than come in 5 days. I think that's the type of stuff you're seeing going on, which will get the unemployment rate up, which will ease some of the pressures on the system, because you're going to have a slowing system. That's going to create a slowdown that takes some of the inflationary pressures out. So I think I can see why he would say what he's saying, but I think there's a lot of support inside the system already. But I do think this is going to be a very uneven environment, and not many people are going to benefit from it. Not many companies or individuals.
Andrew Voss.
Stephen, thanks as usual. Back to food. To what degree does China control the food production and food supply chain around the world? And I'm asking specifically about, and I can't attest to the veracity of this, and Mark, I'll try to get a source on it. I've read it from different sources. There's an ingredient used in fertilizer and diesel fuel. I believe it's urea. And my understanding from reading this is that China owns the lion's share of the production of this particular component. And I'm wondering if anybody on the call or you has any insights on that.
I don't on the urea, but I would say that in general, China needs to import more food than they have. It's one of their weak areas, food and energy, and water, like everyone else, are among their three weakest areas. And I think I think they're not gonna make that, they wouldn't make that a problem for the world, because if they did that, they're in a spot now where they're trying to curry favor, not antagonize. So I think they have their own food needs. So I don't see that as them using that as a weapon, the way Russia is using energy as a weapon now.
Enough. Thank
Hey,
you.
Stephen, are you seeing any or hearing any talk about, I mean, it just seems so inconsistent to me that we know there's a food shortage coming. We know lots of people are going to be under duress because there is a food shortage, and yet they're putting lots of pressure on the Dutch, which has a very productive food part of their economy, to take their land out of production, sort of in favor of their green energy policies. It just it seems like a trade-off with people's lives. Another year or so of I know it's a tricky question. Another year or so of maybe putting off some green energy initiatives in order to make sure that there's food available, so that people don't starve. Kind of work more time into the global economy to adjust and produce more food.
I wish Eddie Vandepart was on the call, because when he's Dutch and he's much more expert on food. I don't really know the dynamics of the food situation in Europe, but it's clear that the green initiatives, and you're seeing it in Germany, where they're debating whether to decommission their last 3 nuclear plants, and how they're going to delay it. I think it's inevitable that some of this is going to have to be delayed to get through the winter, or else you're playing right into Putin's hand. So I do think the green transition is going to have to take a step back to get through the winter, because it's going to be a harsh one. It looks like already. So I think that trade-off is going to have to go on.
They're stocking up on coal again, Tim. This is
Well, they should be, yeah.
Rob.
Yes, thanks, Mark. Steve, on the comment about going to 5 days a week as driven by the company and management, and allowing things to kind of sort itself out, what's you're thinking, that these folks will go off and join other companies, or will they be more entrepreneurial and form smaller firms? What do you think? How do you think that plays out?
Well, traditionally, when you have a recessionary period, people start new businesses, because I'm not sure that I think that a lot of companies are in a spot where they've overhired and need to be more productive. Our productivity dropped last quarter, and at a time when we're investing more for productivity, so it should have gone up. I think these companies are just trying to get their wage base in line, knowing that they're going to have to pay higher wages to their key employees, and not wanting to pay severance. If you force people back into the office 5 days, they'll quit and then move on. I think that's really what they're trying to do. Where they go, I think, will depend. I think for many, it's going to be find new jobs in new areas. I don't think you're going to be able to just rotate from one company to the next, because I think in the big banks, for example, I think they're all going to be looking to do the same thing.
Stephen, Wells Fargo recently announced that they're
And sorry, just since it says your 7th question, Eastyak has a question. I know you're trying to, on a quota basis, outdo Rob when he's not on at the beginning. So, go ahead.
Yeah, thanks, Mark. Thanks, Mark. So I just wanted to address one thing, all right, about the green transition. So as you know, I also have a eco solutions solutions company here in Bangladesh, and for 3 years, nothing. We signed a contract with an exclusive rights contract with a solution provider. It's patented. No one else has it on the planet. 3 years, nothing. And suddenly, in the last literally 1 month, it's like, every day. Right now we are about to sign a deal with a pilot project here in Bangladesh. They want to set up production lines, and they're looking for partners elsewhere as well. Okay, so in some areas it looks like nothing's happening, but at least at this end it looks like things are just amping up. Okay, because I haven't had this much work in like, in this particular, with this particular company for 3 years, all right?
Mhm.
Just want to put my 2 cents in there. Thank you.
Yeah, no, I think you're right. There's going to be a lot of investment in this area, but the issue was, what does Europe do right now? And do they force the conversion away from fossil fuels right now, or do they delay it? And I think that is going to get delayed. That doesn't mean that there's not massive amounts of money going into the green energy transition. That's a big part of what the Inflation Reduction Bill is, and it's also part of what the semiconductor bill is to get to help accelerate the transition because it's technology driven. So I think you're right. There are going to be a lot of pockets where money flows, and there are going to be some of the areas that people thought were going to be cut off sooner, as Mark mentioned, like coal, that don't get cut off in any time frame relative to what they think. So I think there's some really interesting
Bill,
stuff
can I get
going on.
I just want to add one more thing. All right. Before I hand it over to Bill, there's also they're also willing to collaborate right now. Okay, more like, if one energy supplier or a solution provider can reduce your energy consumption by like 5 to 15%, they're looking for other solution providers who can, add more to the energy consumption user, or rather, I'm looking at something that's not just energy producing, but also energy optimization. That is also an area that's being looked into right now. Anyways, I don't know, drop the mic or whatever. Thank you.
Bill?
Thanks. Steve, here's
Just so
interesting
you know,
question.
You're in like the shady thing, just so you know, your lighting is.
I know. My white balance or whatever it is like all out of whack.
Okay.
Anyway, the voice from the shadows. Anyhow, what do you think the odds are that maybe the Fed might adjust their expectations and move their inflation target from 2 to like 3, or heaven forbid 4? Because if you run the numbers, and I saw an interesting thing that quantified the response function for the Fed as being the differential between their target versus real versus actual inflation, and unemployment versus their target versus actual, those two differences squared. And if you just run the numbers on it, I mean, it looks like the damage to the economy and to the potentially the markets could be severe, just equalizing that formula. But if they were simply to allow inflation to say, to be at 3-ish%, which of course what it was, for a long time before we hit, the last number of years. Any thoughts on that?
Bill, I think you're right. I think you're very right, actually, but I don't think they're going to announce it. I think they're just going to allow it, and they're going to talk to their original target and work towards it. But I think they're going to allow 3% inflation for a long time.
Yeah, that's where I was saying, I think the market's wrong on rates going on the Fed cutting rates, because I think they do have to have it. I think they're going to have a hard time getting it down to 2%, which they've highlighted. But they're going to use that as the marker, because otherwise the market will adjust to a higher level and therefore not be as stringent on how they're focusing on it. So I do think they will drift up, but they'll have to evolve there. And at some point they'll say they were data dependent and the data says that they need to be at this rate. But I think it's going to be a tough transition. And if they do that and make that announcement and it's not well telegraphed, that would be a big issue for the markets.
So Andrew, you might be right. They just may not say anything.
I don't see 2% if we even get back to 2%. I think 2.5 is doable by 2024, maybe. But certainly we're going to see in the mid 3 to low 3s in 2023. The rents still have a long time to work through the annual comparison, because real estate reacted very late to the inflationary party. Real estate came late to the party and is going to persist for a while. So I think that's the major difference right there.
Yeah, and I think until we get the energy situation resolved, which is not going to be anytime soon, going back to Stephen's point, it's just too big of a component. So, to see oil.
Nice to meet everyone. I have to go.
Bye, Robert.
Okay, fine.
What's interesting is I live in Connecticut, and Connecticut has by law for the next, 6 or 7 years, they have to subsidize the conversion of 60,000 homes to solar. And that's law. And so in Connecticut's a small state. So you see other states that have similar laws. People don't really talk about this stuff, but there are huge tax incentives out there for people to convert. And, it can lower the price of an installation by like a third at the end of the day. So, and electric cars aren't going anywhere. So I think this transition is not going to be fast, but it's not stoppable. It's only going to accelerate in incremental portions every year.
But Andrew, one of your points is interesting. If it's a slow build, that does create inflationary pressures because you don't get the efficiency benefits in a timely fashion. So it means we're going to be running both.
Yeah, I mean, what the cost of solar? I played tennis with a guy this morning who is in the business. He installs commercial solar. It's the materials are basically free. They're dirt cheap. Most of the cost is labor in installation. So it's certainly in residential. That's, and that's contractors, people up on your roof, electricians changing your lines. So when you hire somebody today, it's, you can do a full package, and you can have a company come in and do the whole thing and connect you to the grid, and you can sell back to the grid, and there's pricing packages. It's pretty interesting. I knew nothing about this living in New York City. So it's fascinating.